Guys, it is 5 o'clock on Monday, so it's time to drink beer.
You'll be proud of me this time. What kind of beer you drinking?
Oh, sweet. Let's get to it, guys. After Hours Real Estate. I'm Chris Peshek, broker associate with Dripping Springs Home Team at Jackson Properties. This handsome dude is Stephen Babcock. He is not Ashley Tullis. Let's get that fixed.
She might be great. I don't know. It wasn't for you, Ashley. It just wasn't me.
He is Stephen Babcock with Benchmark Mortgage, mortgage guy extraordinaire.
Thank you, sir. Thank you.
And so, yeah, it is after hours on Monday, and so it's time for After Hours Real Estate. Do you want me to go first, or do you want to go first? Because you know I'm going to one up you.
Yeah, why don't you start off?
Okay. So we've got friends that were in Colorado for a couple of weeks, and they brought me, I think it was somewhere in the neighborhood of about 2.5 cases of beer back.
Nice.
And so I've got a giant collection of beer at this point. And this is one of my favorite breweries up there. The brewery is called Red Leg Brewing Company. And it's a vet-owned brewery. And so this is their Howitzer Amber Ale. These were a couple of dudes that were in the Army. Yeah, they've got great IPAs. I haven't had this yet, so this is still this is going to be new to me. Yeah, if you're in Colorado Springs, man, Red Leg, that's where they're from. Very cool brewery.
That's really cool. Well, I didn't even know these guys. Whitestone Brewery in Cedar Park, Texas.
Yeah, dude, that's right around the corner from your house.
Yeah, I should have known, but I've already opened this one up. It's really good.
What is it?
It's already halfway done. I'm already finished with half of it. Long Gone Blonde. That's kind of funny. Yeah, it's good. Really good.
Yeah.
Bravo, you guys. Bravo.
There you go.
Cheers.
Cheers. That's a dark amber. That's nice. Let me see. Huh. Not bad. It's a little bitter for an amber. It's almost. It's kind of edging towards pale ale for the amber.
So listen, I'm curious.
Be curious.
Have you heard of any other listings recently where the number of offers have died down?
Mine.
Yeah?
Yeah. We can talk about that.
Yeah, but you told everybody else that it wasn't yours, so I wanted to.
No, that's fine. we just weren't under contract yet. So okay. But yeah, mine. No offers on the weekend, and it ended up with 2 on Monday, I guess. Yeah.
That third, did they not do it?
The third decided not to. The third said they were going to bring a big number, and then decided not to.
You're not the only person I've been hearing this from. That things are slowing down a little bit.
Okay.
I've only heard it from one other, so this could just be a couple outliers. Who knows? But I do actually have some maybe possible news when it comes to economic numbers. They can do that. You know what I mean? And so when you see them do this, they might go up or they might be crashing. You just never know. But I can share those with you later. One thing that was really interesting to me was the Fed took a screenshot of this. Oh my God. So the rates have been changing, right? The rates have been going up.
Yep.
And I've been saying it's because of the stimulus. Say again?
They kind of stabilized a little bit last week, didn't they?
Yeah.
Not really? Okay. Ish.
I would say yes, but the 10-year Treasury hasn't quite stabilized yet. So
okay.
I would say no in the long run. Okay. However, if you really want to know what's going to happen in the political world, you look at the financial world, because they can usually make a good call beforehand as to what's going to happen down the road. It's pretty interesting, actually. And, they've been signaling for a good 2-3 months now that there's something they don't like. But there was stimulus before, and it didn't kill the rates. So I wasn't really quite sure if it was a stimulus or if it was just inflation. Well, it's pretty clear to me now, based on what Janet Yellen has been doing, or has come out with. And just for those of you
about this,
say again.
I saw something about this.
Yeah, but she used to be the head of the Fed, amongst other things. Now she is the Treasury Secretary, and the Biden administration has stated that they are going to increase the corporate tax rate from, I believe, 21 to 28%.
Yep.
And simultaneously today, here comes Janet Yellen, and she's calling for a minimum global corporate tax rate. So basically, what we've learned is that money has legs, right? Corporations have legs. They will stand up and walk over to another country if they can save money, just like what's happening in Texas from California right now, in New York, right?
New York, yeah. Chicago.
And I think what this is a play to say, look, we want to raise our taxes, but we don't want anyone to leave. So what we're going to do is try and do a global. But problem I have with that is there's plenty of other countries that won't follow suit. That'll say, sorry, no, thank you, and make a lower one and be done with it. I mean, let's say China for one might be one.
Maybe you think?
Well, I don't think they can with their form of government. But the point is that they wouldn't care if we did a global law or not. And there's plenty of other countries like that. So I don't know what's really happening here. But I don't think when you have the impact of free money going out, tons of money being printed, tons, and a tax hike on corporations, which ultimately has never been the corporations that eat that cost. It's always been the employees and the consumers.
100% every time. Without question.
I'm not being political. Maybe I am. I hope I'm not being political, but
you don't have to be.
I'm just a numbers guy. Okay. I don't want to argue with anybody, but the point is that I don't know how rates, even though I've seen some forecasts that they might go back down. I don't know how they do. I don't see it happening.
Here, I'll give you my 2 cents. I don't think politically, and it doesn't even stop with Biden. I don't think politically the Democrat Party can afford for interest rates to go up and the housing market to stop.
Hey, type something in for me down here. Hyperinflation ?
Oh, yeah. Michael saying, let's keep it PC. I'm keeping it PC. I knew Michael was the one that liked the amber ale. I knew he was the one that did it. I
don't even want to go there. I'm just saying historically, if you actually look up the very first time our country ever did a minimum wage, ever introduced the idea, it was a very racist idea, and they were openly racist about it.
Yeah.
I won't tell you the conclusion because then I would be kind of being political, but by telling you the actual facts of history. But if you just look at some of the cartoons that both political parties were doing back then, they were joint in their hatred moving forward. Today it's been perversed into something else, and I get it to a certain degree, but there's very clear impacts on these things. You don't have to guess. You can go into numbers,
and there is a history of them.
By the way, sir, this is why I'm also a very big independent after being into numbers. It's hard for me to agree with either side. I usually just tick off both sides and make them both angry, not true. Back in the 80s, et cetera, right?
Yeah, it's like, and I agree. I love when people try to pigeonhole me into a group, and I just laugh, and I'm like, you're a moron.
Yeah,
I'm extremely independent. Both sides are full of idiots. So there you go. Let's talk about hyperinflation.
Thank you.
So
listen, brother,
an interesting thing about hyperinflation that I was reading this morning is evidently the quote unquote median inflation was released, and it said something like 1.5% over the last year. However, when you look at the numbers of goods that you purchase now, just about all goods are up between 15 and 30% in value. So how is inflation 1.5?
I will not claim to be an expert on this. I do mortgages, right?
I'm hoping you can explain it to me, because I'm a numbers guy.
I can give you a vague explanation, but not a specific one. So the way that the government entities involved will measure inflation is by the consumer price index, right? So they will take general goods that are purchased from major retailers that report it. So let's say like a Target or Target.
Target.
Help me out here. It's been a long day. Yeah, Walmart. Thank you.
Yeah.
And they will then only look for specific products that people use, say like toilet paper or things like that. And then they then report those numbers. And so some of those products, a lot of them actually have remained low, while others around them have skyrocketed that aren't being counted in that.
Okay, that makes sense.
What I'm interested in, though, is not what I know; it's what I don't know, right? And
Right.
nobody's ever been at least in my lifetime that I've known of, never has been an infallible prophet, right? No one ever has 100% of the time. I don't care who it is. Like nobody's ever, at least that's alive today, that I've ever been alive. Okay, so um, I guess I'll take this with somewhat of a grain of salt, but more like a block of salt. So the Big Short. Remember the movie The Big Short?
Yeah.
Hey, you know the name of the guy who was a little quirky economics guy that called the whole crash and made a bunch of money for all his clients?
Oh crap! What was his name? It was
Michael
Bale.
Christian Bale was the actor.
Yeah.
Right. The real guy's name, I believe, if I remember correctly, was Michael Wolff or something like that. Okay. And I was having beers. Go out there, go figure. With a neighbor last week, and he says, "Hey, did you hear what that guy who did The Big Short? The guy that called it. Did you hear what he said?" I said, "Well, no." He goes, "Well, look it up." He didn't tell me, so when I looked it up, and let's see, that's what he said. is that hyperinflation is coming to the United States, just like it did to Germany after World War I, when they had people wheelbarrowing cash down the streets just to get a loaf of bread. He made it really clear. It wasn't beating around the bush. I mean, it started off with a warning. Hey, do you know about this? Have you heard about this?
I haven't heard of that, but I'm just look. It doesn't take a rocket scientist when the money machines continue to go burr.
But it's not so much about the money machines, and it wasn't so much about the money machines in Germany.
But is it helping?
It's part of the problem. The other part of the problem is there's three parts actually,
okay.
At least according to him.
Right.
One is the money printing machine, but that alone is not enough as long as the people believe, like the value of Bitcoin, as long as they believe that it's there, right? So the second part is economic disparity. You've got to have huge gaps of wealth inequality, he says. I don't like that word, because then the opposite is wealth equality, and I don't think everybody wants the same, across the board. So anyways, bottom line is that the third one you've got to have is you have to have political chaos where free speech is being held down, or more specifically, people are afraid to speak up. He says all three of those things are very prevalent today, and with then the addition of all this spending and the stimulus and all that, people will then lose faith in the dollar, and if it does happen, it'll happen very quickly, according to him.
Yeah.
Very quickly. And he laid out his warning and said, literally he started with, "I didn't warn people before and I got hell for it, and I'm not going to make the same mistake again. Now no one can tell me I didn't warn you. It's coming." And then he goes into, I feel like I'm not a dumb guy. Okay, I'm not going to go out there and say I'm like an academic scholar or anything, but at the same time, I'm not a dumb guy, right? And so, at least I think I'm not. It says the dumb guy, right? But he lists all these reasons why we're going to go into hyperinflation, and I swear to God, about a third of it I understood. The other third was all these acronyms I just didn't recognize, and then the other third was words that I've never read or even fathomed before. I mean, it was just unbelievable. And I watched a few videos where the people were like, "This is tough to understand, so let me just spell out each sentence at a time." You know what I mean? And some smarter people than me, and it's been very interesting.
Do you have a link? Is it a YouTube?
I did a YouTube search for the guy's name and limited it to last month, and it was like 500 results.
Michael Wolff?
I think that's his name.
Okay, well,
if it's not going to be tough for you to find out the dude who was the real guy from the movie. What's the movie?
The Big Short.
Thank you. Just said the movie name too. The Big Short.
Yeah.
So that's very scary to me.
There's things that if you're paying attention that you can see that just aren't quite right. And again, I'm not a rocket surgeon. I'm not a Rhodes Scholar. But there's things that just don't feel quite right now.
Right.
Now I can say personally for me, I'm Miguel, not Wolf of Wall Street. Hey, Miguel's watching.
What's up, bud? How are you?
Not Wolf of Wall Street. The Big Short. The Big Short.
Big Short is what we're talking about. Well, the guy who originally called The Big Short is now called
right. Yeah, it was the guy Christian Bale in The Big Short, whoever he was portraying. Again, my 2 cents. It's not political. Don't sell the farm and bank on this. But in my mind, investment wise, right now,
Michael Burry, not Wolf. Sorry, Burry. Michael Burry. Burry.
Burry. Okay.
Sorry, in your opinion.
Anyway, I'm just like I'm looking forward, and this is going to sound a little bit convoluted or maybe a little bit self-serving because I'm in real estate and you're in real estate. But I look at investments, and I know one of the reasons that our market is what it is right now is because there's a lot of cash being pulled out of the stock market and being pulled out of overseas investments, and they're buying hard assets in real estate. And a lot of that is being purchased in Texas right now. And those people have a lot more money than I do. But if you think about it for a second, moving forward, let's just say hyperinflation goes crazy. People are standing in lines with buckets of money to buy bread, which I don't think will happen in the United States. It could, but let's just hope that it doesn't. At the end of the day, people need food and they need shelter.
Right. That's the other part of this. So I did some research on who really made out well in Germany.
I can't afford a farm.
I'm a curious person. And what was funny to me is the people that lost almost immediately were the holders of assets and corporations, where, like, let's say you own a mutual fund of gold. Well, then the corporation goes under, the corporation's sister goes under, the insurance company goes under. And before you know it, you're just a lost slip of paper someplace. Right. If there ever was any holdings, they got broken into immediately and it was just over. Right. Yeah. It's just tough to hold on to anything when the whole country is starving. Right.
Especially when the government has that, especially when the government has access to your.
But you got to understand, in a hyperinflation situation, the government doesn't mean much anymore. They can't do much. They could try and get their people to go there, but they can't pay their people in anything.
Well, that's true.
They can forcibly confiscate things. But they can't pay for anything unless they have a gold reserve, which I know we have. So, we'll be okay to a certain degree, but it would never. Anyways, I don't know. Yeah. I can't imagine this happening ever, because then you got to have a whole new world currency. The whole world's going to go into chaos. Truly, I just can't. I mean, we're the world. Anyways, it's hard to imagine, but it happens. It's happened in the past, right? So, who knows? Yeah. Who knows? But apparently, the people that will be the richest are the ones that have, like, chickens.
Well, but think about it.
You're starving. You'll do anything. Take my iPad. I don't care.
That's right. If everything goes to hell in a handbasket, you've been hoarding gold for 20 years.
Doesn't really do anything for you, though.
And I can grow chickens, and I've got chickens and eggs. I can name my price.
Your gold doesn't mean much. Yeah. What are you gonna do? Like, shave off a little piece and then try to get your whatever you know? I mean, it's just not.
No.
That's assuming the guy that's going to trade with you doesn't have somebody in the back of the weapon that'll just take all your gold. I mean, at the end of the day, or the chickens, who knows? I don't know. I just can't imagine living in that world. I don't want to, and I don't want to bet against the country. But I thought it might get some eyeballs if I mentioned what Michael Burry,
Burry, Burry.
Burry. Clearly, I'm not.
Not to be confused with Michael Berry, who's a conservative talk show host in Houston.
Yes.
Okay, Michael Burry.
But yeah, man. So interesting. Right?
Yeah. Now I'm gonna go. I'll tell you right now. I'm gonna open up a second beer, and my wife's gonna get mad at me because I'm gonna go look up what Michael Burry has to say.
You're gonna have to after that.
This evening. Yeah.
Listen, I'll tell you, the 10-year Treasury was falling without an end in sight around the beginning of March, near the near till about today. It slowed down.
Okay.
It slowed down. I wouldn't say it stopped falling, but it has slowed down. But ironically enough, now that the rates are going up, it looks as though the single-family home prices and the annual home price growth rate are slowing. Let me show you a quick share on that one. There we go.
You got it?
Wrong one. This one. You see this over here?
Whoa. I hadn't seen that.
You can ignore almost all of it except for this last part over here.
Yeah.
And this green here is a 30-year fixed interest rate. So it's been getting better and better and better and better and better. Okay, now it's going back up. Right?
And it looks like home appreciation is starting to plateau potentially.
we showed that we thought maybe it was slowing down. You got to keep in mind that these are delayed by quite a while, actually. This is delayed by about 2 months. So in roughly beginning to mid-February, this is what the numbers were. And you and I had seen that, right? I told you about January 4th, rates started going up, so around February. So March or April is probably right around here. So I bet you this is slowed down. I'd be very, very, I wouldn't be surprised at all if it slowed down.
And you're short selling yourself a little bit. You were actually calling this back in November. I'm just going to say.
Maybe. Might be a chance of that. I appreciate you mentioning that.
Yeah, I mean, that's right. I mean, it's all recorded. You nailed it, because you were talking about the inverted correlation between interest rates and inflation.
Honestly, if I really knew it was going to happen, I would be on E-Trade all day long. So
you knew it was going to happen. You just didn't have confidence. You just didn't have confidence that it was going to happen.
Yeah, but that's the good part about not using your money, is that if you're wrong, you don't lose all your money, right?
That's correct. That's correct.
Details. But yeah, man, I do know there's going to be a certain amount of inflation, but hyperinflation, I don't know. I don't know how you would hedge against that bet, and I don't know how the country survives, or the world, really. What are you going to do? But that's it for me. What do you have for us this week, Chris?
Dude, I got nothing. No, I mean, I know that the market is still strong out here and in Austin, but I have noticed, and I think I've been talking about this a little bit. I've noticed that as realtors, you know what our job is. Our job is to get as much money possible for our clients if we're representing sellers. And if you're representing buyers right now, you're just trying to get them in a house because it's damn near impossible.
Yeah.
Really rough. But what I've noticed is that it doesn't take Nostradamus to see this. At some point, when you keep pushing the top of the market and you keep pricing everything at the top of the market, there's going to be resistance. And I've started to notice a little bit of resistance. I've seen some houses that I thought were going to sell, that have not, and they've been on the market for 2 full weekends, and usually after 2 full weekends, they're snatched up, but it's not happening because, again, agents and sellers are pushing the limits. So we'll see if they actually have to start dropping their price, or is there enough residual or enough residual buyers that are still coming, and we're still going to see a peak summer buying season. I don't doubt it, but if inventory catches up, I think we might see that little plateau that you're talking about there.
Yeah.
Share
my screen again. Can you see this?
Yeah.
This right here. You said the prices have stabilized a little bit.
Yeah, there they are. Yeah.
You would be correct. Yes.
Okay. I thought that's what you told us last week, but I wasn't positive.
Yeah, I actually am not confident to say that this is a stabilization, because it could easily just go ahead and drop again.
Correct.
It certainly has stabilized for the time being.
Right.
But, man, I just have this feeling, just like you said, it doesn't feel right. Something... I'm being stupid now.
No, yeah, you're getting a little bit black helicopter on me. But
yeah, okay. I'm not like that guy. It's just to have that massive of a drop that quickly. Let's think about this time. This way, in the last 20 years, I think I said this last time. In the last almost 2 decades, right? There has been 6 times where the basis points have dropped more than 50 points in a month.
Right.
And we dropped like almost 400 in 1.5 months this year. So, okay, that's one of your 6 there.
Can't predict the future, but you can look at the past.
Well, I know darn well why the 5th one happened, right? Yeah. When COVID hit, or at least the shutdown hit, is really what happened.
Well, I'm assuming one of them was around 9/11.
I mean, I don't know. That's
and there was probably another one.
That's exactly 20 years ago. I'm sure that is right. Yeah.
Yeah.
My God.
And you had another
20-year anniversary this year. It is, isn't it?
Evidently, yeah. I didn't even think about it until you said that.
Way to kill the mood. Thanks a lot.
Yeah, thanks. Well, no, but where I was going a while ago was I actually this morning I had to give I'm going to list a house this weekend, and from when I first met with these sellers 2 months ago to where we were last week, they've made $125,000 on their home. That's how much the market has changed on their home in 2 months. Okay. And when I talked to them last week, I said, "Hey, I don't know. We're between this number and this number, and we've got to see what happens this weekend in the market, because if another house pops on the market and goes under contract immediately, then we need to price it up at the higher number." And it didn't happen. So this morning was the first time that I've told buyers in 3 months, "Hey, you know what? I think we need to scale it back, and I think we need to go with a lower number." Because, and again, all the other things that we're talking about being true, if that same little stabilization, or the soft, call it a softening of the market, whatever you're talking about, if that's a thing right now, then I'm seeing it play out in real time with my sellers. And I hope and I expect that we still get multiple offers, and that somebody runs the price of this sucker up. And I hope my sellers can take advantage of that.
Sure.
Yeah, I hope my sellers can take advantage of it. And it's going to be bad for every buyer after them, because anytime a buyer does that, the next buyer has to pay a lot more money. But anyway, we'll see what happens. This will be interesting. I mean, this is a market nobody has ever seen before. So realistically, we're all just grabbed on trying to, we can't predict anything. The comps, we look at comps from the last month, because the comps from 2 and 3 months ago don't have any correlation to the market right now. So we're all just trying to figure out what the hell's going on and to keep up with the market realistically.
Miguel just asked a really good question.
Having issues with appraisals coming in short due to the fact that appraisers not taking into consideration current market value. I had one of those last year.
Miguel, I don't know any lenders that aren't having problems with that. Even the ones that have the positive time adjustment on their appraisals rather. It's become a major issue for a lot of people. I've had pretty much most of them come in short, if not all of them, that are way over asking. Somebody offers like 100,000 over. They're not coming over. They're not coming in 100,000 short, but they're coming in like 20 to 40 short. And then I go to fight them, and it seems like the appraisers are so darn busy that they say that they're ready to let me fight it, but they're asking me for things that I've already provided several times, and it's getting pretty frustrating. Now, that being said, I've heard that the
time out for 1 second. Yeah, time out for 1 second. Hey, Miguel, check your email and click that link. Okay, go ahead.
That being said, there are other markets and other companies out there where the appraisers are really, really in trouble. So, like, our average turnaround time is about 2 weeks for an appraisal, maybe 3 if it's an oddball property. And we have, if we have like an A+ client that's like doing 20% down, then we can do a 7-day appraisal, but it's like $1,200, right? Normally it used to be $450, and now it's $650, I think it is, or $600, because if you're an appraiser and there's only like 100 of you, and every other company is paying you $500 or $600 or $700, and then I offer $450, you're like, no, I'm going to go with these other guys, right? And so we had to raise our prices, but we weren't getting any taken.
Supply and demand.
Yeah, but I've been hearing other markets like ones that are historically slow, like in a normal market in Anchorage, Alaska. Their turn times for appraisals are roughly about 30 days, right about double the time that ours are. Right now, they're up to 120 days, right? And you wouldn't think Alaska would be that busy, but I mean, they just are, right? I think it was really all due to the low rates, more people coming out of the woodwork. But also with COVID, everybody was sitting around not buying anything, and all of a sudden they're like, well, it's the first of the year, let's just go, right? At least that's what it seems like. It seemed like none of this was really happening in December, and then January, it just, skyrocketed. Anyways. Yes, Miguel, I am. Are you?
I'm trying to find out. I sent him a link to join us, and he hasn't.
That'd be great.
He hasn't clicked on yet. I'm trying to
Bring
figure
your
out.
Miguel.
Yeah, right? I don't know what he's doing. He's probably combing his hair.
That's a problem I don't have.
That's right. Just jump on.
Yeah.
Got a cap on, I got a cap off. It's whatever. It's all good. All right. Anyway, so that's the only question we've got. And if
Give me a second.
Miguel's going to jump on. Okay, cool. So let's come up with something else to talk about for a second.
Let's talk about 15-year rates.
Are you noticing our 15-year rates and 20-year rates starting to get a bigger spread between them and 30s again?
Yes. And you know what's even funnier than that is what I've been noticing about down payments. After COVID, everybody's got a whole nother appetite for risk, right, that they had prior to COVID. So typically, the typical rule of thumb is you put 20% down on a home, right? That used to be the general kind of knowledge, right? Especially in the 80s when the rates were up to like 20-something%, right?
Yeah.
They actually peaked at 23.5%. But anyways, so where am I going with this? I've just absolutely had a complete.
I don't know.
Something about 20%. Oh yeah. So
15-year rates, 20-year rates.
When you put 20% down, as opposed to somebody that's putting like 5% down, you have to pay more for the rate. You don't get as good of a rate anymore.
What?
Well, think about it. There's two types of insurances on your home, right? I know you know this, but I'm telling everybody else. One is homeowners insurance. That's like if your house burns down, you get a new home. We love homeowners insurance, right? The other one is mortgage insurance. And mortgage insurance is not insurance on your home. It's insurance on your mortgage. Right. But who owns the mortgage? The bank.
Well, bank, yeah. I mean,
right.
So whoever's buying.
Therefore, it's an insurance policy that you get to pay for that protects the bank in case you default on your loan, right? In case you lose a job or something and can't make a payment, say, guess what? The bank's protected. Like, that's really what you're concerned about, right?
Yeah.
Well, if you put 20% down, the bank doesn't get that protection.
So they're actually punishing you for putting more money down now.
I wouldn't call it punishing. I would say
they're taking
a risk
100%.
Assessment. Yeah, but I also work for them, so I'm going to be nice. But at the end of the day, you and I agree. It's not fun. It's not very fair. But honestly, listen, what they did to FHA loans after 2008/9 wasn't fair either. It's supposed to be meant for. It was literally created for lower income folks to get houses.
Yeah.
And here we are now today. If you put the minimum down on an FHA loan, you get mortgage insurance to pay for 30 years.
Yeah.
Until the loan is gone. It doesn't go away like it does.
Oh, it's horrible. That's a horrible plan.
It doesn't help the little guy, that's for sure.
Oh.
Right?
All it does is helps the who? Oh, yeah, the bank. Gee, if we only knew who had written those rules.
Don't say lobbyists. Don't say lobbyists.
No, I'm not saying lobbyists. I'm saying it's the banks. I'm not even going to pass it off on a lobbyist.
I know. I'm not saying lobbyists either.
Miguel, what's up?
They have what's up, brother? How are you?
Steve. Hey, buddy. How are you?
Nice to see you. Everybody else, I used to work with Miguel. I love it when my wife lets me homebrew. In her defense, in your defense, you were doing that before you met her. So I think that she just kind of had to sign up for that, right? Came with the package.
I do distinctly remember. I remember the one time I did give you some beer and you almost died. It was exploding. I apologize for that.
But it was delicious.
Do you remember?
Yeah.
Oh, you drank it?
Yeah, I drank like half the drink. I would pour it in and it would just foam all the way up, and then I'd wait like 10 minutes and it would come down, and I'd get like a quarter of it or whatever. But yeah, it was good. It's good.
So
I've got a lot better since then.
Where's your beer, dude? Where's your beer?
Point. That is a good point.
Do you not know how after hours real estate works?
You can't join us without a drink. Go grab a beer.
So I'm on the clock.
Still on the clock.
What are you, a mortgage lender?
Let me go get a damn beer. God.
I mean, you don't have to, because realistically.
Oh my God. Wendy is awesome.
Oh, yes.
She's awesome. Please say hello.
Is going to get in one. By the way, guys, I'll introduce. This is Miguel Serra, a really good friend of mine, also a great lender. There you go.
Good
Miguel
man.
works with Geneva Financial. His wife, who is going to get him a beer, is Wendy Yansky, who works with Realty Austin. And let's see if she's a realtor as well. Let's see if she'll pop up.
Yeah, and everybody watching, I trained Miguel myself, so he is darn good.
Yep.
I didn't train him to do mortgages, though. but no, I'll second that. Miguel's really good, and Wendy's even better. You are, my God, man, you're lucky. Wendy's a great realtor.
Yes, she is.
Have you found that kind of hurts your ability to get business, by the way, that your wife is a realtor?
Well, she has said that if I screw up on one deal, I'll never get another one again. So
that's so
I have to keep
funny.
I have to keep my standards up. Oh, wow. It worked.
Does it work?
Hello, Wendy.
Oh,
With a Realty Austin.
Get
Oh,
that
my
Realty Austin voodoo out of
Goodness.
here.
can I have the?
Get that. Oh, and then she drinks it. See, that shows you what
She
type of
brought it.
realtor.
She
That
deserves
shows you
to
what
be
kind of realtor you get with Realty Austin. I would never bring you a beer and then drink it.
Yeah, but you'd never marry Miguel either. So I
That's
mean,
fair. That's fair.
it's
He is a sexy stud, but it's
Oh God.
all the accent. It's not him. It's the accent.
yeah. Well, that's fair too. It's actually the accent and the beard and the beard.
Why did I?
That
join
was a
this?
beard tax. He said. Oh, I miss you guys. I miss a lot of people because of this stupid event. Yes.
The reason why I brought up that question regarding the appraisals was not only have I found that the appraisers are cherry picking, but
they're 100%. Yes, they are cherry picking. Yes.
But the moment you insist that they have done something wrong, or for instance, if appraisal comes in lower than usual, they absolutely refuse to change the value. Even if you provide additional comps, they simply will not do it. I don't know if they're getting butthurt because their work is being checked and they're so busy that they feel that they do not need to go out and reevaluate the value of a property. But that's an issue. And
I have fought now twice in the last 2 weeks, and tell you the first one felt okay. It felt like they came back with a pretty good explanation. It was like, that sucks, right? But okay. Second one specifically had a section that said, we asked you repeatedly for explanations as to why your comps were better, and none were provided. And I provided them 3 times.
Yeah.
And I mean, it was one of those things you're reading and you're like, I did what? I didn't do what? You're just so angry, right? And and here I'm letting down the realtor, but it's not me, it's them, but it's me, right? Because I'm the captain of the ship. So yeah, it's pretty infuriating. But at the same time, I mean, we could have other problems, like it taking 120 days to do an appraisal.
Yeah.
I have a neighbor who works at a big bank, one of the big 4. Okay, I'm not allowed to disparage banks. Neither one of us are as lenders. Right?
Come on, you can do it.
Yeah, no, you're not giving me trouble. No, I'm not gonna say it, but I've asked
her.
It starts with a C. I've asked her. Actually, in fact, it starts with a J. Sorry. Okay. Anyways, so she works for them, and it takes her. She tells me. I said to her, "What's your turnaround time?" Okay, for those of us in the industry, we know what that is. But if you're not in the industry, that means when I have a borrower that's under contract and I submit my paperwork to you, Mr. Underwriter or Miss Underwriter, how long does it take you to look at my file and send it back to me with results, right? And typically, I mean, prior to COVID, it was 2 days. After COVID and everybody refinancing to save their life, right? It seems like it changed to 4 at one time. For a week, it was 5 days, but we're at a 4-day turnaround, right? Which is actually, I think, pretty good standard industry-wise, right? She was telling me, my neighbor, that she reviews a file in 26 days. Heaven forbid there's a problem, because then you get to put it back in line for another 26 days. That's 52 days.
Yeah. No.
Oh my God. Have you been hearing about the big banks closing in 120, 180 days kind of thing?
Jumbos, yes, but
God.
I haven't heard that on straight conventional.
So, I mean, maybe our appraisals are short, but those guys aren't even getting the deals. You know what I mean? You got to close in 30 days. Good luck.
Yeah,
Good luck.
that ain't happening.
Chris, are you taking any offers from the big banks that you see? There it is.
That's true.
Same big bank. Appraiser was out at the house within 7. Wow.
Well, thanks, Wendy. That's great. Thanks for that publicly. That's wonderful. Nice.
Yeah, awesome. you just completely ruined the narrative. You
okay, well, that was
beer.
Appraiser. That wasn't turnaround times, but actually, that's unbelievable. Now, that being said, my I have some family that's very wealthy that went to Chase instead of me. I wasn't happy about it, but they went, and they should have, by the way, in retrospect. But I didn't know that at the time. They went to Chase, to a preferred banking with Chase, and Chase Bank gave them a rate that I couldn't touch to save my life. They closed them in 19 days. There are divisions of the big banks that have specialists like that 7-day appraisal kind of thing. I bet you it wasn't for a low-priced home. Wendy. Sounds like it was probably one of the bigger ones. There you go. Boom. And I was shocked too, because I was like, oh, you're with them? Guess what? I could probably compete. And then I got blown out of the water. So, at the end of the day, he made the right decision. And there are outliers to what we're talking about. But I think Wendy would even agree with us that I think you're probably better off going with a local lender, a local realtor, a local everything, title, appraiser, everything local.
Yeah.
Like always. If I were going to go buy in Michigan and I could get the commission, I wouldn't do it. I would pay someone.
Yeah. Without a doubt.
Yeah.
But, all right, man. Well, we rolled up on 40 minutes here pretty fast. So let's
wait a minute. I want to hear about Miguel.
Miguel.
I want to know how things are going, man. I mean, how did you do a lot of refinances last year? What's going on?
Yeah.
Yes. Everybody did last year. What are you talking about?
Yeah, everyone did. The only issue, I think everyone's having the same issue, is one, the lack of inventory, obviously, and my biggest pet peeve is, and I hope I don't get anyone in any trouble, but it's the builders lenders that are, pigeon-toeing a lot of borrowers into using their title company and their lender. And
sure, we'll sell you the house, but you have to apply with our lender first.
Absolutely, and that's
last I checked, that was illegal unless you're a builder. Just FYI to everybody else out there.
Yeah, it's you work with people for several months, helping them get their credit where they need to, and then obviously because there is no inventory, they walk into a new building community, and the next thing they know, they have to go with their lender. Have to. I'm struggling with the have to. It's.
Yeah, I had a guy that I put 10 offers out on over the last 4.5 months. Finally got the house. And the realtor that we were using went on vacation for 3 days or something, right when we got the contract. And some other realtor on the team, by the way, it was one of the number one teams in Austin. And some person on the team said, hey, I don't know the lender you're with. You should shop with our lender after 4.5 months, right? And their lender had a 0.124 better interest rate before I even competed. And the guy was like, listen, man, you were jacking with me with the rate. I can't believe I worked with you so long. I'm so sorry. I'm leaving for this guy. And I dug a little deeper, and he was like, listen, truth is you've done a really good job, but I feel guilty that I'm leaving with you. And the thing is the guy showed me how much interest I would save over 30 years with a 0.124 better interest rate. And I said, well, if I could compete, would you stick with me? And he goes, well, but that guy also guarantees the close. And you said that you had to get everything in your system quickly to order the appraisal in time. And I'm just sitting there like, oh my God, 4.5 months. And I just stopped. I didn't compete. I didn't fight it. I just thought, you know what? That's your attitude. You can go right ahead. And then that guy sent me a $200 check for my time. You've ever had that happen before? I mean, never, oh my God. The whole thing was just bizarre. It was just bizarre. I'll tell you, but no one has a worse job than a lender in a raising rate environment, right? Oh, my friends told me the rate was better than this. I think I'm going to shop around. Right. Yeah. But when the rates are getting better, you're like, oh, dude, you're the best. I'm not going to shop. No, I'm going with you, man. But there's really no difference. Do you know what I mean?
Yeah. Yeah. And this is where it's important to really drill home the fact of, do you want to go to Walmart and get a toothbrush, or do you want to go to CVS and get a toothbrush? That probably wasn't a very good analogy, but I'm just saying,
I'm kidding.
So just so that everyone
knows. Do you want to go to Walmart and get a toothbrush, or do you want to go to your dentist and get your teeth brushed by the dentist?
That would probably be better, but I get what you're saying. Walmart to Target kind of thing. Target.
Uh-huh.
Yeah. Plastic car compared to a metal car.
I used to. This guy over here. You used to work.
I'm in the middle, I think. Yeah. Are you in the middle?
Wait, who are you pointing at?
You're in the middle. Yeah. And I'll never forget on Fridays, if I did a good job that week, Steve would let me watch a movie, and more than likely it was Wolf of Wall Street.
No, we only watched that one time. You just love the movie.
That's why you asked if it was Wolf of Wall Street.
You loved it so much. We watched all the sales movies, is what we did.
I have never power dialed so much after watching that movie. And every time I see a Steve Madden pair of shoes, I think of you, Babcock. Oh my God.
Yeah. Oh man.
Thank you.
Thanks for your help. I appreciate it.
And it's splitting hairs. What is she saying now?
She's saying between, the going from one like Walmart to Target and buying a toothbrush, splitting hairs.
That's all good. You know what? It's okay. It's the nature of the business we're in. And I get it. And quite frankly, we get to help a lot of people too. So it's all good.
We do. All right, dudes. I'm going to cut it off. I'm going to cut it short. Not short. It's 45 minutes in. We're going to get done here.
Yeah, this was good. Right.
Miguel, dude.
Thank you.
Thanks for jumping on.
Yeah, you're welcome.
And, guys, we're here every Monday at 5 o'clock drinking beer. And, hell, who knows if Miguel watches again, we'll probably have him on again.
Like that a lot.
As always, if you've got questions on real estate, you can ask me. If you've got questions about mortgage, you can ask Steve. You can ask Miguel, too. Doesn't matter to me. Just don't ask Wendy for real estate help, because ask me. That's why. And she's still watching, too. That's what makes it funny.
That's really funny.
Thanks, guys. Leave me with her. Thank you.
Yeah, exactly. Yeah, bring him another beer.
It's not your show, Wendy.
I wouldn't have said it if you hadn't put that dang koozie up.
All right, guys. Thank you.
All right, you'll have a good one. Miguel, hang on. Hang on, Miguel.